All right. Hey, everybody. Welcome to the webcast of the Instant Payments Decoded. I'm Marcia Klingensmith. I'm the Instant Payments Maven. And today we're tackling a topic that's going to change the financial landscape in the US. That's open banking. And with the recent passing of Dodd-Frank 1033, the rules of the game here are changing and financial institutions need to be ready. And so to help us decode this landmark regulation, I'm excited to welcome leading experts in open banking and instant payments and payments modernization. So here today we have Lori Burns and Chris Wilson and Reuben Piryatinsky. Oh, and I forgot to ask you, Reuben. I hope I didn't mangle that.
You got it right.
So I got it right. Okay, awesome. Okay, so welcome. And so before we dive into the conversation, if each of you could just tell the audience a little bit of your background and your expertise in this area, that would be great. And we're going to go around clockwise. So Lori, how about we start with you?
Sure. Hi, everybody. I'm Lori Burns. My background is fully in financial services. I've been in financial services for over 30 years now, building and running digital products, including payments. So I spent 23 years at Wells Fargo, jumping back and forth between retail, small business, and treasury commercial. I've managed complex payables and receivables. I've mostly been a product executive and had really broad exposure to all aspects of running a product, so that lots of payments products. So that includes the P&L, pricing, the fraud exposure, the risk mitigation, regulations, tech, and customer experience. So got a big, deep background there. I also, one of the products I ran in the past was an aggregation product. So I have some very, very early insight into online banking before that was a term. So in my days at Wachovia, we saw screen scraping demand increase and built out some of the very first open banking APIs. So I was actively involved in FDX and standards before they kind of became what they are current day. I've also spent, after Wells Fargo, I spent a couple of years at AvidXchange in the B2B accounts payable and invoice automation space. And then most recently, I worked for a small firm that was building out an open banking platform. And today I'm doing consulting in digital strategy and payments.
That's awesome.
Excited to be here.
Yeah, okay, that was a great overview. And like, you're talking about screen scraping. One of the exciting things with open banking is hopefully no more screen scraping, but we'll dive into that more. Okay, Chris, you're up next.
Absolutely. And Laura, that's an incredible history. Myself, I have about 25 years between software and financial services, mostly within the financial services space. Moved from Citi over to Fiserv. I had 14 years with Fiserv, mainly within transformation, so leading large scale or running teams that led large scale transformations in terms of aligning business value and the tech that goes along with that. And it included everything from core to payments to digital banking to BSA, AML, everything that it takes to make a bank tick and move a bank forward within their market. For the last 2 years, I've been with MX, specifically focused on our open banking products and the promise that open banking can really give to consumers and realizing better experiences and improved finances. So that's about me.
Love it. We're going to have a great conversation. And Reuben, last but not least, give us an overview of your background.
Happy to. My name is Reuben Piryatinsky. I run a consultancy called Altitude Consulting, and we're helping financial institutions as well as fintechs get ready for open banking and 1033. We are a strategy and technology shop. I personally have 20 years of experience in financial services. I started my career on Wall Street at Morgan Stanley and Bloomberg. And I've also started a couple of fintechs along the way. So in my career, I've launched trading systems, I've launched APIs, and a lot of fintech products as well. And what I've discovered throughout this journey is that this partnership between banks and fintechs was always challenging for both sides. And not only that, a lot of the financial services that we're using today could be much, much better. Could be like Google, like Amazon, like what we get from Apple. And I started Altitude with a mission to change financial services and to bring them into the future. So I'm super excited to be here and super excited for this new wave of open finance.
Likewise, likewise. Awesome. Well, so for you folks on the call, before we dive into the conversation, we want to get a sense of where you guys are at today. And so we're going to do a really quick poll. I think you're going to have to look out for it in your chat. Like, are these webinars a little bit of a newer feature? So you should see, if you don't see it pop up on your screen, look for it over in the chat section. There should be a poll that asks you, how familiar are you with the Dodd-Frank Act section 1033 ruling on open banking? I'm aware, I'm informed, I'm strategizing, I'm implementing. If you could go through and put your perspective on there, that would be great. And the other thing too, folks, as you're going through this presentation, we do want to make it like interactive. So if you have questions or you want to provide your insights, you can raise your hand. We also have a chat box and we have a Q&A section. So feel free to engage with those areas. Okay, I know people are still still gathering. So we have some results that have already come in. So it looks like there's like a third of the folks that have attended are just kind of aware, and then a couple of the folks are informed. But it doesn't look like anybody's yet in strategizing or and implementing yet. So I don't know if any of you guys want to respond to that, or if we just want to go ahead and dive in.
Yep, I think that's great that we have awareness of the ruling. We're going to talk about it in much more depth. So let's just dive in.
Agreed.
All right. Awesome. Okay. Well, I think, Reuben, we're going to start with you. If you could kind of give us a clear and concise explanation of what exactly Dodd-Frank 1033 is and what it's looking to achieve, and any, I guess, key dates that our audience needs to be aware of.
Absolutely. Dodd-Frank 1033 is a new regulation that was just finalized in October 2024. And it mandates financial institutions to launch APIs for secure sharing of consumer financial data. Now, if you've ever logged in to a financial app with your bank to connect your bank for payments or for anything such as personal financial management, budgeting, and so on, you've probably used a process called screen scraping, which means that your credentials were stored by a third party. The third party logged into your bank on your behalf, and then they screen scraped, they got all the data from your online banking. So this 1033 regulation is changing that in providing APIs, basically secure channels for this data to be exchanged. It applies to several types of accounts. So deposit accounts, which are savings and checking. That's also called Regulation E. Also Regulation V, which is credit cards. And it also applies to payment processing companies and digital wallets. So quite extensive. If you are a bank, you're likely affected by this, you're impacted by this. And I'll talk a bit more about the types of financial institutions that are impacted here. And also, if you're a fintech, if you're a payments company or a wallet, this could apply to you as well. Now, in terms of timelines for depositor institutions, if your institution is taking deposits, the key timelines are April 1st, 2026 for organizations that have $250 billion in assets or higher. April 1st, 2027 for 10 billion and higher, so 10 billion to 250 billion. The next timeline is 2028 8, so April 1st, 2028, and that's 3 billion to 10 billion, and then 2029 for 1 to 3 billion. And then April 1st, 2030 is for 850 million and above. If you are a non-depository institution, such as payments processor, if you're processing $10 billion a year or more, April 1st, 2026, and under $10 billion would be, $3 billion and I believe under $10 billion, my apologies, under $10 billion would be April 1st, 2027.
So yes, it sounds like the bigger an institution you belong to, the more urgent paying attention to these deadlines is going to be. And then I guess if you're smaller, it buys you a little bit more time to figure out what's going on. But since this is all mandated, it's really good to stay on top of this regulation now and start thinking about the implications and the opportunities that this represents, I think. And I mean, for me, one of the exciting things is just, we've been talking about people's privacy for a long time, and it feels like everybody's benefiting from our data except for us. So it's really kind of nice that we're finally having a ruling that allows us to have a little more control over our information.
And Marcia, if I could chime in as well. So the larger institutions like Bank of America, Wells, Chase, obviously, they have this implemented already. So the ruling timing itself is in their favor. They have a bit of a head start. For the smaller institutions, honestly, they've got a little bit of catch up to do. They can do it, and they should do it. And that's what we're going to talk about today.
Yeah, that's good insights. Thanks for sharing. Chris, one of the things that I hear a lot is people get confused between open banking and open finance. And I was wondering if maybe you could kind of just clarify what's the difference? What does each one mean? And what's the difference between the two?
The two terms do get interchanged a lot. Even in the CFPB 1033 guidance itself, Dodd-Frank, it actually says the terms are interchangeable, but we refer to it as open banking because it's commonly used as open banking in the U.S. So I kind of get the mix on that one. For a lot of the international community, however, open banking and open finance are different. Open banking really constitutes banking, credit card, and some aspect of lending data. So like Reuben covered, it's Reg E as well as Reg Z data, which also includes buy now, pay later and the fintechs. So it's something that was great to see that was added from the initial proposed rule versus the final rule. Open finance, however, typically represents a broader scope. So it includes things like investment data, small business deposit accounts, tax data, crypto, other aspects of data from an open finance perspective that you could think more holistically, you could share in order to, again, the give for a get, in order to get better experiences that come out as a result of that. And we'll talk about what some of those experiences and use cases could look like. But yes, so open banking is typically the core. Open finance includes open banking as well as adding another layer around that. And I've seen that go further, expanding beyond banking. Some say open data represents all the data and all the aspects of our lives that could, again, if we, as a trade-off, we give more information and get more things out of it. So we could see that as what's to come.
Yeah, I think that's really interesting. Not only, I guess, with the open data, like how much does that encompass and what regulations are going to be around that and where does that, I mean, I guess there's a lot of possibilities, but baby steps, we just start with what we have immediately accessible to and get a handle on that. And then I think as we get used to dealing with a smaller data set, then it'll help us understand possibilities for the larger data set. Is there any additional clarification? Like you mentioned Europe, is there anything else that's different about what we're doing here versus what's happening in Europe today as far as open banking goes?
Yeah, the approach is actually pretty different. So I have the privilege of working with multiple international partners and being within the industry. Some of the things that I hear is that open banking worldwide, hands down, is gaining traction, and it's because of the consumer benefits. The governmental regulatory authorities want to see broader competition. They want to see better experiences come to consumers, but the approach and how they've approached that has been different. Most regions, hands down, have a regulatory first approach. So that includes PSD2 in the EU, which started around 2016, the Consumer Data Right, or CDR, in Australia from 2019, Joint Resolution number 1 in Brazil from 2020. Canada is actually headed down a similar path. They're now targeting, as of earlier this week, 2026 for implementing their rule. So they're somewhat, I'd say, focused on regulate first and open it up a little bit later. In the US, however, there are multiple entities that have guided from an industry and governmental partner type authority. And so that approach has been more market driven. And that market driven approach included a nearly year-long period to solicit comments. And then that final rule in the US was actually developed in concert with industry, which is great to see. Some other regions explore the same kinds of things as well, maybe without so much formal legislation. That includes India, Japan, Singapore, South Korea, maybe South Africa as well. But that market-driven approach is what the US, I think, is going to make us successful.
Nice. I mean, it looks like we lost Reuben here. I hope he comes back. So this is a really good start, and I want to do another poll for our audience. And so now that we've talked a little bit about what open banking is and some of the regulations and how it's different in Europe, I'd like to get your perspective on, do you guys feel ready? Like, how well are you understanding this? And let me just quick launch this poll again. The poll will either appear as a pop on your screen, or if you're not seeing it as a pop on your screen, go check over in the chat window because it might be there. And welcome back, Reuben.
Thank you. Seems like my connection dropped.
Yeah, it's all good. Wasn't sure if that was an emergency call. So we're just doing the quick poll. And it's just exciting to see, that there's so many, that this is just like a movement around the globe, just like instant payments is a movement around the globe. And these things, I think, all interconnect. And one of the things, I mean, obviously, I'm the Instant Payments Maven, and my focus is kind of using instant payments as the low-hanging fruit. But open banking represents a really great opportunity to tie these all together. And so I want to kind of have Lori transition us over, because Lori, you've been in this space a really long time. And I'd love to get, your insights on what are some of these changes in the landscape that have brought us to where we are at today here with open banking. And you kind of gave us a little preview in your intro, but if you could, expand on some of the things that you shared earlier, that would be great.
Sure. Thanks, Marcia. So I think it's a really exciting and interesting time in the U.S. financial services market. So we have the trends that we're talking about today with open banking in play, with the regulation coming to light. And then we also have what's going on in payments and the advancements of payments. So I'm going to talk a little bit about both of those and how they intersect. It just opens up a whole nother avenue for opportunity. So I think, Chris and Reuben touched on it, but really with the regulation coming, I think banks are, all financial institutions understand that open banking is here. They need to do something about it. We need to open up data. I had an opportunity to sit on give feedback at the CFPB regulation as it was drafted, and everybody wanted to do this, right? And so there was no debate with the regulation. It was just how and when and things like that. So I think it's very welcome. So banks, everybody's interested in opening up their data, enabling those fintechs use cases. So I think that was the first big step. And since I've been in this trying for a decade now, that the first realization that the data belongs to the consumers. And as long as the consumer is authorizing that data, they should be able to use that and bring it into apps for new and exciting opportunities. So that was sort of that evolution is there, and it's really exciting that we've got 1033 here. and I think that everybody's working towards that open banking model. And then with that, I think most banks are offering data through APIs. So we're seeing, like Chris said, all the big banks have development portals, APIs. So they've put the technical infrastructure in place at the big bank level to make it easy to get the data, which then makes that opportunity open up for new applications. And then as we roll in payments into that, so now you have all this great banking balance and transaction data to work with. You can see payee information. That helps enable a bunch of use cases, right? And then you bring in payments, right? And then that really opens up the door more. So we've got on the payment trend side, we've got that continuation of moving from check to electronic payments. We've got more and more people using P2P payments like Zelle and PayPal and Venmo. And then we've got real-time payments, which is kind of the instant payment we're talking about today in the US. And that adoption's picking up. I mean, the clearinghouse launched RTP 7 years ago, and now we're seeing we've got 17 of the top banks using it, ready to send payments, and most banks ready to receive RTP. So the nature of an instant payment kind of opens up new use cases as well, including, I'll say some of that for the next questions coming up, but just those are some of the trends, right? So just the technology's in place. RTPs available, instant payments are available. So everything's sort of come together now, right? Some of us have been waiting a long time and it's here. So I think that we're ripe for new innovation.
I'm looking forward to talking a little bit more about the use cases, because that's going to help, I think, make it real for a lot of people. When we go back to just a second, when we had the poll, so it looked like we had a pretty consistent response on the poll questions, which, by the way, I haven't closed these poll questions. So if you guys, go back in the chat section, you can always, if you haven't already responded to a question, we definitely are interested in your feedback. So please feel free to go back and respond to the different questions. But what we saw in the last poll is that it looks like everybody's still kind of in like a figure it out mode. Like, what does this mean for us? And so our goal as we go through this is to kind of help you understand like what these opportunities are. And, if you want to, talk with us, after the fact, you can schedule time with me, and then, I'll orchestrate, get you connected to the folks to get the insights and answers to your questions that you need. So our goal is to kind of get everybody in a really great place by the end of the session. Before we continue on with questions, like, we do want this interactive. So are there any questions or, that you guys want us to make sure that we address during this conversation? Because we want this to be value add for you. So make sure if you have a question, you're putting it in the chat or you're raising your hand. So let us know. Okay. All right, so let's get into a little bit more of the pragmatic angle of this. So, Lori, you already kind of were giving us little teasers, but can you give us some specific examples? Like, I think we should start, fraud prevention, like in instant payments. That's the one thing that I always hear from everybody when you're talking about instant payments. It's like everybody has a big concern around fraud. And so instant payments represents a really great opportunity to protect the bank, protect the customer. So can you talk a little bit more about, using open banking as for fraud prevention?
Yeah, absolutely. I think enabling the security and some of the risk mitigation for payments is critical with open banking. And that's really probably the most valuable intersection. So, and what we mean by that is, in the instant payments, right? We're seeing instant payments being adopted by something like Zelle for people paying people kind of scenarios. So we're seeing instant payments really kind of taking off on the consumer side. It was slow progression, but it's getting there and slowly making its way to the business to business side as well. But some of the key things you can do for security, right, would be if somebody is initiating a payment, we now have something called Pay by Bank, right? So instead of always using your credit card when you pay for consumer goods, you can now pay by bank, which really means that it's an ACH payment, but I'm using my checking account, right? Like just like a debit card or something kind of nature would be, where it's coming directly out of your checking account. And to enable something like that, the application that's initiating the payment needs to really make sure you are who you say you are, right? And that you actually own that account that you're pulling funds out of. So the way that that is enabled is through, what we're seeing with open banking, by looking at, the information, the customer's identity information being provided by the bank's open banking channel, as well as, transactions, or even checking a balance to make sure that that payment can go through. So that's really exciting. We've had some of that in place historically, but it was all done through screen scraping, which I'm sure Reuben can, and folks can jump on and talk about. Screen scraping was not the best practice. It wasn't super secure. So now we have better mechanisms to pull the data to make sure that person is who they say they are, to help prevent fraud in those P2P models. And then also just some other kind of models around payments. It's not just person-to-person payments, but we've seen businesses paying consumers. So if somebody's getting a refund check or something like that, those funds are going into a consumer's account. So we're seeing instant payments pop up in different use cases. So person-to-person, consumers paying businesses, businesses paying consumers, and I think slowly businesses paying businesses. So, but the open banking component of seeing that consumer data really helps validate the security and avoid risk.
When I know, so today in Europe, they have the verification of Payee. So in Europe, when they're doing an instant payments, the recipient information will pop up. And so you can say, oh, I thought I was sending information to John Doe, but then I see, Sneaky Pete's name pop up there instead of, who I was intending it to. And so the idea there is that you would hopefully stop and ask yourself, like, why is this different from the person I think I'm sending it to? So that's a thing in Europe, but we can't really do that here. So even though we're having open banking, so I don't know if one of you wants to explain a little bit what's the difference there, like why is that the case?
I could
Just
jump.
coming back here. Yes, go ahead.
So I'll start and feel free to jump in just because I'm on it. So I think we have ways to do that in the US. So if you look at something like Zelle, it's network based. So the fact that you're in that network as someone that is paid, sometimes you are now a known entity. But you're right, we're using different kind of mechanisms. So I would say it's highly network based. Same in B2B models with accounts payable automation, things like that, a buyer supplier network. You're in the Zelle network, you've got your mobile phone and email registered, Bill.com, for example, another kind of small businesses paying each other. But if you're in the network, then you're a known payee. But that is really, Marcia, to your point, the payee that's getting paid, that is the highest risk point in a payment transaction, right? Knowing who you're paying, where that money's going to. You have to validate where it's being initiated from when you're initiating, but you also have to validate the payee side. So that's kind of how we solve for it in the US. I'll let Marcia, you probably know kind of the international viewpoint on that, what they've done as well.
Well, I mean, part of it, because with instant payments, technically it's a more secure payment because that it's a push payment. So people with your account information can't pull funds out of your account. Like, you have to be in your account and you're initiating that transaction. So your main points of vulnerability are account takeover or the social engineering, which is where that verification of payee comes in. That if you get that pop, ideally it stops you from validating. It kind of gives you a clue that maybe you're not sending this to the person you thought you were. And my understanding, and of course you guys are better experts on this, but my understanding is that because with our open banking, it's the user giving permission to their own information. In that scenario, like, we're not you have to have that end recipient that says, yes, it's okay to pop my information in that scenario. And that's one of the reasons why we're not going to be able to do that today, is because it requires that permission to get that pop. But I don't know if there's somebody can elaborate, one of you guys.
Yeah, absolutely right, Marcia and Lori. What I would add to that is that with a couple of things. One is that on the topic of providing access to specific information, as the account holder, you can now with open banking, you'll be able to provide access to only specific fields, specific data in the account, and not to all of your data. So that makes it more secure. In terms of payment initiation, there's also the authorization to and that's to have pre-authorized payments versus not. So that's to the point of push payments versus pull payments. There are two methods here.
Yeah,
Not sure
I'll
if I
chime
answered the
in.
question.
I'll chime in a little bit too. Sorry, Reuben. So other countries do have a national payments scheme, organization, utility, right? In the US, we don't. We're more point to point. Yes, we have networks like Venmo, Zelle, PayPal, right? And so I did a Venmo just the other day, and it asked me what were the last 4 digits of the phone number of the person that I was sending money to. So there are mechanisms, but they're really more point to point within closed loop networks rather than a national utility. So I think that might be a primary differentiator, Marcia.
Yeah, no, that's great. Great insights. Okay, so let's pivot off of the to more like besides fraud. So I would like to hear more about like what are other use cases we have now that we have kind of like this additional insight, this additional information. Can we now provide better customer experiences? Can we now generate new sources of revenue? I guess we can go around the table, but maybe Lori, can you share some ideas that you have on that?
Sure, I'll start maybe more broadly. I know we are in a payments discussion, but more broadly, there are lots of opportunities with open banking itself. So just to touch on some of those as well, we are opening up. We have the traditional sort of value that we've seen early on with open banking, like the ability to aggregate your account data across institutions, right? And see your whole portfolio in one view. That is still a really, really important use case. So open banking is enhancing that, making it easier to get that data from all institutions. So a lot of times if you used a personal finance app that did that, you couldn't see your more obscure accounts at certain places. So now we can see that full picture. And it's all about convenience. So I think that's the convenience driver, to see everything in one place. And then we've got interesting new use cases like the dental, that we've got a bunch. I've seen lots of these, like you're having dental work done and you want to apply for a smaller loan, like a $2,000 to cover your dental work, something like that. Companies offering those type of services are using your transactions so they can get through open banking, get your transactions, and then using that data to underwrite you versus your historical credit report pull and that type of. So that's really exciting. There's new underwriting mechanisms. I think I touched on, the ability to disperse funds, use all the new security features to do payment account validation. And then there's a whole realm of, I think what innovation in being able to pull these experiences into the app, right? Tightly integrate the payment into the app. So you can make a payment now from anywhere, right? Now, like your kid's school portal, your toll payment for, using your HOV lane, everything's got the payment experience embedded in it. So the acceptance of the payments, card acceptance is always in the app now. Like we've just gotten used to it. We don't think about that, but that is just become the norm. And then it's exciting to see that you don't always have to pay with card. You can now do the pay by bank. We're seeing more and more pay by bank, which is allowing the person being paid not to have to pay some of those hefty interchange fees. So, and that's just the tip of the iceberg. So I'm sure there's just new innovation, constantly evolving here. I'll let others jump in on that topic.
Yeah, I'm happy to elaborate. A couple of my favorite ones. The first one is account opening. So that's really the first interaction that we get with new financial institutions. And right now, in a lot of cases, account opening can take days, can take weeks by the time your account gets approved and your information gets verified. There are use cases, there are live examples where account opening has been reduced to be under 3 minutes, and that includes all of the KYC or know your customer checks. So that's a really important one. Another one that's related to account opening is account funding. So 40% of new accounts that are opened are become delinquent and never funded, and that's a huge loss for a financial institution because these are all customers that they could have otherwise had. So being able to fund your account through instant payments, which is aided by open banking, is extremely valuable. And I would say for another one is lending. So Lori touched upon micro lending. I can add to it, if you've ever taken out a mortgage application or have done a mortgage application, you know how painful the process is, gathering all of your documents, providing the documents, going back and forth with the bank, waiting for adjudication and so on. Well, with data, it's going to be streamlined extremely well.
You know, if an institution asked me to bring in all of my statements or all of my transaction history in a printout, I think I'd go somewhere else. I don't think I'd bank there, right? So
You'd bring
the
a book,
ability,
Chris.
exactly, the ability to provide my account history and share it between institutions because I want to have freedom of choice is a huge game changer, right? That instant access. And I know it's secure with open banking because it's securely shared via API and tokenized rather than just a screen scrape. That gives me the confidence that it's what, right? My hackles don't, my sketchy hackles don't go up right in the back of my neck, right? This actually is legitimate. So thank you, Lori, for talking about some awesome use cases with personal financial management and insights near and dear to my heart for sure. And I'd say the only other thing that I would add would be more around fraud fighting use cases. Also, like you mentioned, Lori, with identity authentication, fraud prevention, transaction monitoring, ideally capturing transactional behavior before a transaction occurs, right? Should this person be doing this, as well as after the fact. So that's all I would add there.
Right, and I guess like there's probably going to be opportunities. Well, so I first of all, like Chris, like again, re-emphasizing the fact no more screen scraping, because I know a lot of these applications, it's like you're giving them your username and password, and then they go into your account and they're scraping your data for the purposes of paying a bill. But then, like, as long as they have access to your account, you don't know what else they're doing in there. So they could be looking at your investment information, pulling all sorts of information you don't want them to have access to. So it's really nice, like to your point, with the tokenizing the information and ensuring that only the pieces of information you want them to see are what they're actually getting access to, and also not having to expose your username and password, which we always know is a no-no. I think like having maybe flows, like when we're in an experience, like you talked about, like or I don't know if it was Lori or who was talking about kind of like these embedded experiences. I think like as we go forward, like we're going to be in an experience, maybe you're, I don't know, funding, doing a soccer game, and you need some, you want to fund your kid's soccer match or something, and you can be in their experience and then draw information or draw funds or interact with your bank account in this other experience. So I think it's going to be really interesting on how that's going to evolve. Like, what are those immersive experiences where information can be shared back and forth to create opportunities to do something new. And then the loan aspect, like maybe predicting when somebody's a week, before they run out of funds. It's like, hey, normally you have this bill that hits, on the 25th of the month, and you're 5 days away from that, and you don't have enough funds, or you're getting kind of close. The bank could maybe notify their customers, hey, you're running low. It's an opportunity to go out and get a gig job. It's an opportunity to maybe cut an expense, or maybe it's an opportunity for the bank to offer a microloan. So that gives you options. So let's pivot a little bit. Again, audience, if you guys want to ask any questions, feel free to chime in here. But let's talk a little bit about, the technology. Like, is this, and AI, of course, is like a hot topic. So does open banking open opportunities to, leverage AI? Now that we have more data, can we use AI and machine learning to exploit that, or to use that? I don't know, Chris, if you want to share some insights around that.
Thank you for bringing up AI. I don't think there's a new regulation that came out that says every podcast has to talk about AI. So thank you for checking that box. Seriously, it's actually a really important question, because if you look at institutions, right, and I call them an institution, large organizations like Klarna, who is in the papers all the time. Hey, we've either eliminated positions, or they have something like 90% of their back office business team that uses AI literally in their everyday work. I mean, it's an incredible efficiency gain, especially for smaller institutions. It allows them to be able to punch above their weight, adding in, within your own strategy. Maybe it's with Copilot, or maybe it's with one of the other large language models, right? Some great things about AI is it's really awesome at synthesizing large amounts of data. Guess what? Banking data and transactional data is large amounts of data, so that's perfect for giving awesome insights. We already mentioned a number of these great use cases that AI can really provide a game-changing type experience for end consumers, like PFM, financial insights, also the fraud-fighting ones, identity authentication, fraud prevention, transaction monitoring, maybe some business use cases like payment reconciliation, remittances. I think you mentioned that, Lori, a little while ago too. Some credit use cases, like I think you mentioned this as well, Reuben, income verification, credit checks, and the cash flow underwriting topic that has the chance to be a great equalizer in terms of gig economy workers, person-to-person transfers. AI can also take some of this monitoring a little bit further on. Did you all know that some cars have the ability to monitor your driving habits with your permission and report it to insurance, and you can get a bit of a break? So is AI on that same kind of track to monitor my spending habits and give me a bit of a break? I don't know. These are some things that I think people are exploring currently and have the opportunity, based on open banking data, to provide. I don't know. Others, would you like to chime in too?
Yeah, that's a couple of things on the AI topic. The first one is that from even from the basics of the data perspective, there's now a lot more data and a lot more higher quality data that's available for machine learning models that is enabled by open banking and in general open data. The other point is that now that more data sources are becoming available, and high quality data sources, so we're already seeing this in Australia, where open data is a mandate of the regulation of so there is, for example, open energy data and telecom data. You can get your utility bills and your telecom bills through APIs. Now that opens up opportunities to underwrite various loans based on alternative types of data. So that not only include your financial data, but other data and other consumer behavior. And there are lots of companies that are now capitalizing on that opportunity as well.
And Marcia, I'll add one more, since we're talking about data. So, having been a longtime banker myself, moving to the open banking model for the FI, for the financial institutions themselves, there's more, the financial institution can now see the data being shared and report on it, right? So this was really big for me in my past. I love this use case, but a lot of QuickBooks Online, I'm going to pick on QuickBooks Online, is uses screen scraping. I think still slightly today, moving away, but a lot of my financial institution partners, myself in the past, like being able to see your QuickBooks Online users is amazing. And you get that kind of, and not just that app, but every app that had been screen scraping when they're coming through an API, you can now see who those customers are, who's requesting data, how often, what they're looking for. You can control the data they get, and then you can see that data. So even the financial institution has a new set of data and demand on the demands for data. Then you can, then you can take that data and you can apply AI and do all sorts of learnings about your customers, new product development from that as well. So it's inside the bank as well as, data for external partners.
Absolutely, and that can also be used for customer retention. So, for example, if you see that a customer is shopping around with a fintech app for a specific purpose, for a mortgage, for a credit card, or any other service, now you can target them with an offer like that, and you can also have a much more meaningful conversation with your customer, something that you weren't able to do before.
I'll add one final thought on this. If you look at the intent of CFPB's 1033, they've always said they want to increase competition in the consumer's favor. Everything that we've talked about, all driving towards competition in the consumer's favor. I think that's the biggest intent behind it, and I'm wholly in favor.
Yeah, well, I mean, I think that's a really kind of, it sounds like a really powerful tool, because a lot of the times, banks start losing customers and they have no idea like what's going on and why this is happening. And so it sounds like this is going to be a great tool to get transparency onto customer needs, like to Reuben's point, having that better conversation, or to be able to, I mean, just build products or build services that are going to address those pain points. Is going to go a long way. Do you guys, because monetization is a thing that we always hear about. I mean, at the end of the day, this is an investment. It's a mandate. It's an investment. We just heard, you get the opportunity to do fraud prevention, so that's probably going to reduce costs. There you can improve your onboarding experience, or streamline that, convert more folks as they're opening accounts, and so that's going to hopefully drive more customers and more revenue, and if you have more insights into their behavior, you're going to be able to tailor the products to meet customers' needs. So that's going to drive retention. So already we're hearing a lot of benefits from that investment of time and money that is mandated. So it sounds like it's going to be a good thing. And to your point, Chris, the better experiences, it's all about the customer. This is going to help the customer. So are there any other tips or advice any of you guys have around, doing that, any other revenue driving use cases that our folks should be thinking of?
Yeah, I'll jump in and say, I think, from a financial institution viewpoint, like we just queued this up well with the data. You have the data to see what customers are demanding. So that's an opportunity to build new products where you might have a gap, right? A certain type of loan, maybe on the, business side, you don't have commercial cards or something, there's the opportunity to build new product sets. But then, if it's not really within the strategy for a regional or smaller institution to build those products, I would absolutely say, think about the fintechs and form partnerships, right? Just, you build a channel. So a lot of financial institutions look at this as an API. It's a new channel. It's not an extension of online banking. It's not your call center. It's absolutely an equal channel. So it needs product management. It needs strategic thought, and there's opportunity to build partnerships. So if you're missing a product in a portfolio, build a partnership with the fintech that offers a really great product in that space, and then you can have a dialogue about revenue exchange, right? What there might be a beneficial model where both parties benefit. So I think partnerships are really, really important.
Last
Absolutely.
I checked, I'll add in real quick. Last I checked, the C in CFPB stands for consumer. So the 1033 guidance, the final directive covers consumer data sharing. Anything else is legitimately billable for. So on the financial services side, can you add in some kind of a micro payment to start recouping costs around business data? Why not? right? Build in some small fees, let that go into regular account analysis. From all the other data that you collect, feel free to think about how you can monetize that. Again, charge what you think is appropriate and what the market will bear. But that is another way to be able to monetize the actual data sharing that comes along with this, because you'll already have the infrastructure in place on the consumer side.
Okay,
And
those are good.
real quick on Chris's, just to tie into Chris's point.
Yeah.
It is just consumer. So if you do have a wealth division, you have brokerage, there's demand also for that type of data. That there could be a way to monetize access to that type of data as well.
Both access to that data and also insights based on that data. If insights about your consumer behavior helping you budget better, and then really providing the right experience and the right product at the right time.
Great product, right time. And we just covered a lot of ground, guys. So I have a little poll there. So as of those ideas that were just thrown out at you, is there a particular value prop that resonates or something that you heard? If you guys could look at that poll, it's either a pop-up or in the chat. Would love to get your perspective on some of those use cases that we just heard. If any of those particularly resonated with you guys. It's kind of free form. Maybe the wealth management, loans, adding fees to products, getting personalization, using the data for loans, alternative data sources. Anyone? Yeah, I guess people don't like the free form poll questions. It's all good. So Reuben, you've got this great program that you have built out to really help banks kickstart this journey of open banking. Do you want to share a little bit about like how you're, what does this look like? How can banks like very quickly? Okay, we get some folks going. Yeah, you guys keep up with that poll. Put your use cases on that poll while we continue the conversation.
Yep, happy to share. We have a 6-week program which helps financial institutions get ready, create their strategy and the roadmap for both 1033 compliance and also to turn compliance into an opportunity into monetization and into growth. So we look at all aspects of your organization. We look at your processes. We look at your business model. We look at your readiness, people who are in place and capabilities. We'll look at your technology, architecture, and so on. It's very comprehensive. And by the end of those 6 weeks, you get a full roadmap for meeting the 1033 requirements. You get an understanding of where you are right now, as well as how you're going to specific use cases with data that let you build your business case to monetize the 1033 regulation. And one key aspect here is that when you're looking at a regulatory exercise like this, sometimes you know that you are going to have an initial investment into compliance. The key here is to turn that compliance into an opportunity to grow your business and to differentiate your business, to showcase how you are doing a better job for your customers. And this is exactly where we'll lead you in those 6 weeks.
Yeah, that's awesome. And of course, I'll be kind of engaging as well on some of those bodies of work. So teamwork. And if you guys are looking for experts or if you just want to have a brainstorming conversation and maybe you're not ready to dive into this yet, but just want a conversation, there's no harm in just booking time. My QR code there, my calendar is available, just scan and I get some time and we'll just do some brainstorming. And if I can't help you, I have a wealth of resources, talented people that can help you. So I'm always happy to make the connection, get people connected to the resource that can help them in their journey. So I have another poll that I'm going to launch. Again, we have, oh, it looks like we're going to have some questions coming in. So we do have a few minutes. What's our question here? Loading up. Okay, so we have a couple questions here. So what's the single most important item that tech providers must do to assist banks and credit unions maximize and monetize their data? Single most important item that tech providers must do to
Tech providers, as in companies that essentially provide the technology infrastructure.
So Lisa, I don't know if you want to clarify, or should we just kind of run? I guess I don't know, Reuben, do you want to run with that, or Chris, do you?
Yeah, happy to. So the first thing for a tech provider such as a core banking system, for example, is making sure that they understand the regulation and that they have a plan for their clients to meet the 1033 requirements. So either to provide the APIs and the developer experience for the financial institutions, and there's a very high demand for that for specific segments of financial institutions, or to have strategy and partnerships with open banking platforms that provide this infrastructure. This is going to be critical because now a large proportion of FIs will have to meet those requirements. And the other thing that I would add is ensure that you have some ready-made use cases that you can provide to your customers that are already prepackaged with your offering, that to show them instant value. That's really important. Either have that or have partnerships with other companies that provide those use cases.
Robust answer. And then the next question is, for acquisition and expansion, will 1033 ease a consumer's use of a balance transfer offer? And are current interest rates included, or RTP payoffs supported? What's the scope of 1033?
Yeah, that's a great one. I'm happy to take this one as well. So yes, 1033 does require financial institutions as well as payments companies to provide information on rates and on terms and conditions for accounts. So from that, this information, now that this information is becoming available, it is going to facilitate these balance transfer offers that include plus the account routing information, plus instant payments. And now you've suddenly solved a lot of the existing challenges that are in balance transfers.
Awesome. And we're pretty much, we have one more poll. Let me see if I can quick pop that poll, and then we should kind of wrap up. So I just want to let you guys know that we do, like, this recording, this is has been a recorded conversation, and we are going to make that available on the YouTube channel. So if you go to YouTube at instantpaymentsmaven.com, this will be available within a day or two. So our last poll was just to kind of gauge, whether you found this session valuable based on what we talked about today. Like, are you guys going to take any action? So we'd love to know whether nothing changes, or if you're going to get help, or if you're going to be doing some research or working on your roadmap. So if you guys could just take a minute there to take that poll, that would be really great. And I just want to say, Lori, Chris, Reuben, this has been a great conversation. I know I'm learning about, I had some knowledge about open banking, but I've gotten a lot more insights, and I'm going to be continuing to develop my knowledge and skills around open banking, and definitely, working to, incorporate that as part of my, instant payments and payments modernization strategy. So I appreciate you engaging here. This has been really a fun conversation. Is there any more? say read up. I see a lot of people just saying read up on open banking. Well, that's a great first step, just, staying informed. If you're a large institution, you're going to need to be doing a lot faster reading if you don't already have a plan in place. For your smaller institutions, you have a little bit of time, but it's good. Just reach out and connect so you can start putting that strategy, because there's an opportunity to tie, like you could even use open banking, which is mandated, and get the funds for that, and then use that as your catalyst for doing your instant payments implementation, because instant payments is really going to be a game changer, and it's going to help you meet the needs of your consumers, for your customers. 78% of Americans living paycheck to paycheck, so by offering instant payments, you're already doing doing a great thing to help meet the needs of your customers. And then now that the Fed now has raised their limit to $10 million, there's going to be a lot of really great B2B use cases, which is really where you're going to be able to drive revenue. So use open banking as the catalyst to get your funding to do all these other great works. And we have a wealth of resources. Schedule time here. Contact information here. You can reach out to any of us. I will get you connected where you need to be connected. And thank you again for this amazing session. All right. Have a good day.
Thank you. Have a great
Thanks,
day.
everyone.
Thanks so much.